Now, the Energy and Petroleum Regulatory Authority, EPRA, now wants punitive action taken against oil marketing companies for diverting fuel meant for local consumption to export markets. EPRA is proposing that fuel companies that have increased the amounts they export get reduced quantities of the commodity in the next 3 import cycles. Now, in a letter to Petroleum PS Andrew Kamau and CS Monica Juma, seen by Citizen TV, EPRA Director General Daniel Kipto recommends that companies that increase their volumes during this period get a greater allocation of fuel. Let's get more details now from Faisal Ahmed on that report.
The situation across the country very similar in nature. Motorists queuing for what has suddenly become a scarce commodity with few explanations on cause. The effect very much clear. As motorists scramble for what has in the past been an easily available commodity, the government and oil marketing companies continue trading accusations. The Energy and Petroleum Regulatory Authority has accused some oil marketers of shipping out fuel supplies as the prevailing fuel shortage in the country enters the 3rd week. In a letter addressed to Petroleum Principal Secretary Andrew Kamau and copied to CEOs of the oil marketing companies, the energy sector regulator has highlighted the increase of the export loads by the same marketers. As retribution, EPRA has proposed the reduction of capacity share for all oil marketing companies who raise their export volumes. The reduction is to happen in the next 3 import cycles. EPRA proposed a corresponding increase to reward marketers whose local volume sales increased. Further, the Kenya Pipeline Company confirms that there are sufficient stocks in all depots across the country. KPC stock positions as at start of business today was super at 139.5 million litres, diesel at 123.66 million litres, kerosene at 11.08 million litres and jet fuel at 35.505 million litres. EPRA's condemnation of the OMCs comes as long queues at petrol stations remain the order of the day in spite of the regulators and the marketers striking a deal last week to resolve the fuel supply impasse.
Gini manze juu wale tunaumia juu kama sasa hivi kwa nimekuja na 1500 nijaziwe mafuta nimeambiwa naweka mwisho 200 sasa nimerudishiwa pesa yangu sasa 200 itaweza nisaidia kwa kazi yenye nafanya.
Tumekaa kwa line tumepoteza muda mwingi sana hapa around 1 hour. Tunangojea tu alafu wale patu pale mbele wanasema lazima ile maziwa tunaweza kunywa ni 1000 peke yake. Hakuna kukunywa zaidi ya hiyo. Sasa sisi tunashindwa hata kazi zitafanyika namna gani?
Okay, nilikuwa nataka tu kuongeza mafuta kumbe nilikuwa na mafuta kidogo. So nimekaa kama 30 minutes hapa kwa laini. So mpaka ikaisha.
Nakuru Governor Lee Kenyanjui wants the Energy Cabinet Secretary to intervene to unlock the gridlock which has caused inconveniences in the country.
Sehemu za huko mpaka Gilgil na Naivasha tumeona hii shida. Sasa wenye bodaboda hawaendi kazi. Yule yuko na posho mili natumia diesel haifanyi kazi. Kwa hivyo pia tunasema na tunaomba serikali hii mambo ikiendelea hivi katika siku zijazo utakuta mtu kama alikuwa anaenda bodaboda na yeye pata 500 analisha watoto wake. Amepark bodaboda hakuna mafuta.
At the fuel depots in Nairobi's industrial area, hundreds of trucks were parked with many of them not ferrying fuel for more than a month. Fuel shortage has remained sticky in some parts of the country at the start of the week, including the capital, Nairobi, despite assurances by government offices on supplies at the end of last week. According to sources, some of the marketers have likely resorted to hoarding of fuel products once more in anticipation of higher maximum pump prices to be announced by EPRA on Thursday this week. With the fuel shortage still persisting, many Kenyans are asking themselves where the problem is. Is it with the oil marketing companies or with the government? However, the question that they want answered is how soon fuel supply will return to normal. Faisal Ahmed, Citizen TV, Nairobi.